Happy Thursday. It's August 15th, and I'll admit these slides, while interesting, truly interesting, there's not a real good flow. I couldn't figure out how to make it just totally work, but we're going to go with it today. But there are some really cool stats in here, I think. So it's personal opinion, but let's find out why I think that. First of all, rates. Man, they're still trending in the right direction, that mid six range, give or take. Here's the mortgage backed securities market. Remember, green is good, up, meaning when we go up, that means lower rates. You can see how we had a good run. Last week, we went a little higher. This week, a little lower, but we're giving it back today. So the good news is we're kind of holding at that S1 level, that horizontal black line. You can see that that's kind of a resistance level at this moment. We do expect and hope that we're going to see rates stay here and even improve over the near future. So here is why. CPI came out this week, and basically, without looking at all this stuff, just understand that the biggest number is that first top yellow, the 0.165. That's the month over month change. So if you annualize that, that's less than 2%. That's where the Fed wants to be. So that's good. And if you take the 3-year, I know that's not on this list. I don't think it's on here. I don't see it. But if you take the 3-year average, it also is less than the 2%. That's the Fed's target. So for cutting rates, they got the green light. It'll happen next month. That is awesome. The biggest thing what we've been saying, you see the highlights in the yellow column or the left column in yellow, shelter and motor vehicle insurance. Those are the big numbers that are keeping inflation up. If it weren't for those things, man, we would be a just wonderful, easy keen, no big deal type inflationary environment. It actually would be like close to zero. So those two things, they are what they are. They're not going to change. The PCE comes out at the end of this month, and that's going to be the Fed's favorite gauge. So we'll see what that is. It won't be as good as this, I don't think. Time will tell. It's just based on the weightings. But point is, we're going in the right direction, team. Inflation breakdown. This is the year over year change. Who knew frozen, non-carbonated juices and drinks were up that much? Eggs, we've seen before. I've made fun of that before. On the right side, you see motor vehicle insurance. Photographic equipment and supplies. It's amazing what they keep track of, guys. Cigarettes, daycare. That makes sense. That's always expensive, always going up. So there you go. There's a quick breakdown of your inflation. What does that do to rates? We are starting to see adjustable rates come back a little bit, just a little, not a lot, but these are the short-term rates. And this is just a fun little chart to show you just how much they went down to 2021. And then all of a sudden, when the long-term rates hit like 8%, they gain back some popularity. So you can kind of see what it is in terms of, again, don't need to look at it outside. You guys can see how like arms were nothing for a while, and all of a sudden they're back to being a big deal. So they're coming back. We shall see. With the recent dip in rates, so call it a half point, give or take, round numbers, mortgage applications are up just 16% this week. And that's a weekly increase. And I think the numbers that have just come out, refinances are up like 35%. So in other words, rates just drop a little and it makes sense. So if you have a rate at 7 or even a high 6, reach out to us. Let us know if you have questions. We're happy to run numbers. And some of this, I'm telling folks, don't refinance. Not today, not yet. Let's be patient, but we at least run the numbers and get kind of everybody queued up. So when it is time, we can jump on it. So please, please, please reach out to us if you're not sure or want to check into it so we can make sure that you are, in fact, going to save some money. The biggest thing that's coming into effect, buyer agent commission. I've actually switched the slides. I'm going to go to the next one. Starting next week, which was the 17th, that Monday, realtors now have to operate a little differently. You've probably seen the news, so I'm not going to belabor this point, but that goes into effect on Monday, whereas buyer and sellers need to now have conversations with their agents about commissions. It has changed. Just know that if you are selling your home or if you're buying a home, please, 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 please get with your realtor. Make sure you know what's coming and how the commissions are getting paid, because that is a big change. We're not going into it here, but that does come into effect next week. So the boomers, basically, they thought they had it bad when rates were like super expensive in the 80s. You hear the stories of, I got my mortgage at 18%. Well, millennials apparently have it worse in terms of affordability, because these poor millennials, as you guys know, house prices are up, rates are up. They have it worse in terms of affordability. Now, what I don't see on here, which is the following news story, so I forgot to include it, is apparently millennials are like crushing it in terms of net worth. And they've literally over the last 4 years, like just propelled into suddenly being farther along than where the boomers and other previous generations were because of housing. Because houses have shot up so much and the real estate market has shot up so much in the last since COVID that now the millennials, God love you guys, are now farther along in life from a net worth perspective in relation to where the boomers and previous generations were. So who knew? Congratulations, millennials. I'll dump on you a little bit every once in a while, but I'll give you props on this one. Fannie Mae real estate owned. This means foreclosures. Check it out. Look at the foreclosures and what we haven't had. So if you hear the word, like, or see headlines like, oh man, foreclosures are up, well, it's because they're coming off of like nothing levels. So foreclosures, the numbers came here. It's decreased 10% in Q4 of or pardon me, Q2 of this year. So it's really and truly, I mean, it's just crazy how little there is. And that makes sense because equity is up so much, people don't get foreclosed on, they just sell their house. And then this one shocked me. I don't know that I truly believe it, but hey, we're reporting it. Apparently, it costs less to build a house now than it does for old houses. So in other words, an existing home versus newly built. Apparently, in May of 2024, it became $3.50 cheaper per square foot to build as opposed to buy existing. Again, I'll believe it because there's a graph and there's some numbers in front of me, but I just find that hard to believe, but there you go. All right, these cities. So if you recall last week, and if you didn't, I'll just refresh your memory. Last week, only 4 major markets had inventory greater than what it was in July of 2019, pre-COVID, in other words. So we dug a little deeper, found some other inventories that are up. San Antonio is there. Dallas is number 6. But you guys can see, compared to the levels before, these inventories are now higher today than what they were then. Now, having said that, the appreciation, at least in Dallas, because that's one I paid attention to, the appreciation has matched the population growth has matched the increase in inventory. So in Dallas overall, I know this is Dallas, Texas, but Dallas Fort Worth as a whole has had a 6.5% more inventory than pre-COVID. And now our population growth has also been mapping at about the same 6.5%. So we should be relatively balanced, but I just thought I'd share some other cities. Finally, let's have some fun. The world's loneliest house. Check this out. That picture on the left, that's not photoshopped. That's a real house. Apparently somewhere in Iceland, this little house exists. I want to know how they built the darn thing. I mean, that would have been a lot of work, but apparently they did. They built this little house, and apparently it's a hunting lodge. So there you go. That's the world's littlest house, if you want to call it that. And then astronauts, if you guys have been following the story, I never wanted to be an astronaut when I grew up, and this certainly doesn't make me want to be one now. These poor astronauts are stranded out there. So good luck to them, but just give them a little hat tip to say, just good luck. So lastly, meme of the week. Refinancing saved me how much? Guys, we've been doing a lot of numbers lately in the last 2 weeks, just running numbers for refinances, and it is astonishing just how much a little move like this can save over a long period of time. So reach out to us. Let us know how we can help you. We'd certainly love to do it. And as always, let's get social. Come on, like, share, subscribe, forward, all that fun stuff you know to do. Hope you have a great remainder of the week. We will be in touch, and we'll talk to you next week via video.